What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on MMTLP and FINRA saga.
I got the cash in the bag, stadium packed. Born a rock star in this life, gonna live it up.
And for today's video, guys, I have several quite interesting news. First of all, I will show you very interesting set of tweets that were written by George Palakoros. And these tweets, basically, it is his investigation based on the work that was made by one of the quite famous economist, and that is directly related to short sales on the US stock market and related to the MMTLP saga in particular. On top of that, I will show you what facts might be important for us and what type of sources we can use or we should not use, let's put it this way. Then I will show you the results of the interactions with the Congress members, and I will show you a new deadlines in one of our 1209 cases. So, and before we dive deep into all of this, guys, please hit the like button for YouTube algorithm and drop me a line in the comment section if you think my videos are valuable for you. On top of that, guys, if you want to know more about technical analysis, if you want to enhance your trading skills, feel free to subscribe to my YouTube channel and to join my Patreon account. And guys, to be honest, within the next couple of weeks, I will remove a couple of tiers, low-cost tiers. I will add much more perks, much more benefits for the safe haven tier and for the gold tier as well. And it is pretty much your last chance to join my Patreon with just $1 a day. And take a look, let me show you the sneak peek of my recent calls. Just yesterday, as you can see, I made this call on Netflix when the price of this asset was $1.227. It was at 1 a.m. And I told to my patrons that it is a new opportunity to short Netflix. Then, guys, I covered this price action in a live pretty much basis. And right here, I identified 3 price targets for Netflix. And we hit all of them. On top of that, I told to my patrons that they can put their stop loss orders in green and try to ride the trend, because we can hit much lower price targets. And guys, less than 24 hours before this call, I made another call, and it was a call on GME. Take a look right here. Wait a second, I will show you first of all the exact call. It was made on June the 10th. And it was a short put butterfly. You can see that within just several days it became profitable, and it was about 10% profit on the initial investment. This means, guys, 2 out of 2 successful calls within just a couple of days, and that is why you can rely on my technical analysis and you can join my Patreon for the low prices, for at least for now. So guys, and I want to begin today's video with this tweet, and I have to admit that Daniel Oxer he achieved his goal. He collected $15,756. It is $156 more than his initial goal of $15,600. And just recently he wrote a novel with Marcos, and he started to collect this money in order to send this novel to his readers. So, and let's continue with our main news. Just yesterday I showed you that it is very important to have the people like Dennis Neal in our community who consistently support our case and who made more than roughly 12 podcasts and several interviews with crucial people. And just recently he wrote this: did you know your broker Fidelity, Schwab et al. Can loan out your stocks to hedge funds intent on short selling them and hammering down the prices? And market makers like Citadel Securities are exempt from rules restrict shorting. At the request of Bernie Madoff, my column up now, MMTLP, and he added the link to newsmarks.com website. And guys, as I already mentioned, it is very important to have this type of people in our community, because with their help, and to be honest, I'm one of these type of people, because neither Dennis nor me or the MMTLP shareholders, but we want to help you to achieve your goals. And in my opinion, this is partially my personal goal to help you. So, and here is quite interesting tweet that he reposted, and basically it is the set of tweets from George Palackers that I found quite interesting. Let me show you this in details. So, first of all, he wrote, "Thank you, Dennis Neal, for your timely article backed by the March 2025 research working paper Reg SHO at 20. I read the 81-page paper by John W. Welborn, PhD in economics, who works at Dartmouth University. He is a well-published academic with a proven track record in financial markets research, particularly on short selling and regulation SHO. Welborn's other research is available here. He added the link to his research, and let me quote it further. There is a 2-decade failure to enforce fair market rules, failures that mirror and explain the unresolved issues behind the numbers of stock, including Tesla, DJT, MMAT, MMTLP, and many more. Here's my take and opinion. The never-ending naked short, how Reg SHO's force rules train wrecks opinion. ETFs like XRT saw FTD's peak at $414 million and short interest as high as 699% of float. Yet the SEC seems to have taken no action for years, and he added the exact page where he found this information. If British bureaucracy is a masterclass in delayed gratification, America's regulation SHO is a Kafkaesque circus where the clowns run the show. Welborn's damning paper exposes 2 decades of regulatory theater, a saga of loopholes wider than the Atlantic, reforms that reforming nothing, and settlement failures so brazen they'd make a loan shark blush. Regulatory force, a master class in ineptitude. Reg SHO was sold as the sheriff to tame Wall Street's naked shorting outlaws. Instead, it looks like it has become their enabler. Welborn's data reveals a $3 billion daily FTD habit, unchanged since 2005. Proving regulators might as well have handed market makers such as Citadel, Virtu Financial, and the like a get-out-of-jail-free card. ETFs like XRT aren't anomalies, they are the system working as designed. The SEC's response? A shrug and mumbled, "We'll fix it next time." Spoiler alert, there is no next time. Let's look at some examples and crank up the volume so we can call this what it is, a regulatory pantomime where every ticker gets to play the fool. The ETF XRT, the ETF that broke reality. XRT isn't just a kind of threshold list, it's the sovereign of financial absurdity, or as we say back in the UK, the dog's box. Imagine shorting a stock until you owe more than exists and then shorting it again for good measure. That's XRT, 1,691 days on the list, short interest at 699%, and fails to deliver, stacking up like empty pinned glasses after last call. There is no official, globally recognized record-keeping body for most consecutive days on the regulation SHO threshold list, and so 1,691 days. Has anyone called the Guinness World Records Ltd yet? The SEC's reaction? Splendid, carry on. If XRT were an English pub, it would be serving pins it never had, and nobody would mind so long as the till kept ringing. GME, the meme stock that refused to die quietly. GameStop is the unruly guest who, after being asked to leave, climbs back in through the window. FTDs through the roof. Short interest off the charts. Short interest in GameStop famously reached over 100% of the float in January 2021. Market makers armed with Reg SHO's guidelines orchestrated a short squeeze for the ages, while the SEC played the world's smallest volume. Conflict of interest. Market makers profit from both sides, collecting premiums on options while influencing stock liquidity to trigger squeezes. If this is market integrity, then I'm the king of England. Tesla, the tech darling perpetually under siege. Tesla loved by retail, loathed by shorts, and stalked by FTDs like persistent X. Every time Elon Musk tweets, the shorts pile in and the fails to deliver pile up. Tesla was until recently the most shorted stock in the United States, with billions of dollars bet against it by short sellers. Settlement optional, reality flexible. In Wellborn's world, even the mighty Tesla is just another pawn in the game of let's pretend we have the shares. There is a historical pattern of increased short interest or trading activity following high-profile tweets or announcements from Elon. The only thing more relentless than Tesla's FTDs is Elon Musk's drive. One of them disrupts market, the other disrupts industries. DJT, the latest headliner in Wall Street's regulatory circus. Trump media didn't just debut, it landed in the markets like a marching band in a minefield. Volatility of the charts, FTDs piling up, naked short whispers louder by the hour. Since inauguration day, the stock has tumbled approximately 44.9%. DJT has appeared on Nasdaq's regulation SHO list, which tracks the stocks with persistent settlement failures. It's as if Wall Street looked at MMTLP and said, watch this, Reg SHO loopholes still wide open, enforcement still out to lunch. DJT is just the latest proof that if you leave the door unlocked, someone will barrel through it and stretch limo and regulators blinking in disbelief. MMAT and MMTLP, lamps to the slaughter. Not anymore. The U3 halt wasn't a glitch, it was structured negligence in my humble opinion. Retail watched as phantom shares followed the system. FTDs and short interest outpaced the laws of physics. Dartmouth's Reg SHO at 20 confirms in page 29. The highest FTD level was $20.3 billion on September 23rd of 2008. Notably, the second highest FTD level was $19.8 billion on September 23 of 2024. Median FTDs were $2.26 billion for this period. Loopholes designed, not accidental, and he added the source of this information. And the FOIA docs? They expose coordination between FINRA, OTC, DTCC, and SEC. Timelines, names, silence. No one blinked when MMTLP got halted. They knew. They went silent for months until they could put together a story, which was revised at least once almost a year after the halt. But here's what they didn't plan for: 65,000 relentless retail shareholders. A court-appointed trustee following the paper trail, 2 management teams flagging misconduct, and legal and financial teams collecting all available trading data to understand the size of the problem, and a small group of quiet allies in Congress, watching, building the record, preparing the next move. They thought they would fold. They miscalculated. Wellborn's paper confirms that we all have come to know. Market makers exploited Reg SHO's bona fide exceptions to make it short with impunity. MMTLP's over a month on the threshold list wasn't a glitch. It was a feature. The SEC's inaction, a neon sign reading, "Come manipulate here." Loopholes, also known as black holes, Wall Street favorite parallel trick. The OMM exception isn't just a loophole, it is a black hole. Firms like Citadel and View to turn market making into a shell game, resetting FTDs via options shenanigans while regulators snap. XRT's 1,691 threshold days as of 2023 SEC data. A badge of honor. Anyone is that current Guinness World Record in a system that rewards financial arson. It demonstrates systemic settlement failures. Threshold securities require special monitoring under regulation SHO, but we haven't seen any meaningful enforcement to date. Did you know regulation SHO's bona fide market making exception does allow market makers to short without pre-borrowing shares? Critics argue this creates a loophole for perpetual failure to deliver cycles via option strategies like deep in the money puts. While Citadel and Virtu haven't been formally charged with this specific abuse, academic studies like Wellborn's confirm options markets can mask FTDs. Chained lending and synthetic shares. Rehypothecation chains reusing collateral across multiple transactions can theoretically create infinite synthetic positions. The MMAT and MMTLP stock situation highlighted this risk. These synthetic shares weren't a bug. They were the system's piece de resistance. Regulatory reforms. Can the new administration and Dodge make difference? Did you know the SEC's 2023 proposed regulation SHO amendments would require pre-borrows for certain positions, but implementation remains pending? Why? Did you know after the SEC eliminated the OMM exception in 2008, overall FTDs fell 37.6%, threshold stock FTDs dropped 52.8%, persistent FTDs aged 17 plus days in optionable stocks declined 62.9% versus 41.4% for non-optionable stocks. The 2008 emergency order temporarily reduced FTDs in financial stocks by 90% through pre-borrow mandates, but wasn't made permanent. Why? The 2008 emergency order set a precedent. It demonstrated the exception's role in enabling fails rather than legitimate hedging. SEC own source. He added the link to SEC website. This disproportional impact on option-linked securities suggests the exception enabled cyclical FTDs resets through options strategies. Documented abuse mechanisms. The exception allowed OMMs to execute reverse conversions, simultaneous put sales and short positions without pre-borrowing, create synthetic share inventory for prime brokers through unreported files, avoid stock loan costs indefinitely by rolling options positions, source with the investor's SEC petition. Enforcement patterns. Multiple SEC and FINRA cases revealed OMMs used the exception for speculative shorting rather than bona fide market making, created stock loan arbitrage, schemes benefiting prime brokers, maintained perpetual fails through options expiration cycling. And here is the takeaway. A rigged game. All the above reinforce my opinion that there is currently a black hole in the markets, a systemic vulnerability. It is not another benign loophole. The brain hurts anyone reading up on all the available information, policies and cases. Wellborn's fixes, pre-borrow mandates, fines, closing loopholes, black holes are logical. I'm afraid that's why they will never happen. The SEC had 20 years to act, but penalties would hurt Wall Street's feelings and their profit margins. The 2008 emergency order proved that pre-borrows work. The SEC's response? Let's never speak of this again. DJT, Tesla, GME, XRT, MMAT and MMTLP aren't outliers. They are case studies in regulatory capture. Retail investors and issuers and management are the marks in a Ponzi scheme sanctioned by FINRA and the SEC. Reg SHO's legacy, a market where settlement is a punchline and the house always wins. So, when the next issuance stock explodes, remember, the regulators aren't asleep, they are complicit. Nothing to see here, said someone at FINRA, probably. Final thought. Here's an idea. Dear FINRA and dear SEC, at this point you may as well declare a national naked shorting day. How about December the 9th? So guys, I have to admit that it is very interesting. First of all, it is very interesting to read this person, John W. Welborn, and his 81-page paper that he made, I would say, just recently. He wrote it just recently, and to make our own conclusion. But in general, guys, it is more than enough to see that we have a lot of discrepancies on the market that basically, well, it ruins a lot of retail investors. I mean, it ruins their accounts. And MMTLP is just a part of this huge game. And unfortunately, the probability is not on the retail's side, especially if you don't know how to properly choose certain assets and how to manage your position. And definitely, everything depends on your risk tolerance, but you have to keep in mind that you can lose everything on the stock market within a blink of an eye. So, and well, I don't have enough time, unfortunately, to show you more information about well, some recent updates, but I want to pay your attention to these new filings in Spears versus Securities and Exchange Commission case. We have basically just yesterday I showed you that she filed an order for extension of time. And these two orders were granted by the judge. And this means, guys, Daniel Spears has to answer for the Securities and Exchange Commission motion to dismiss by July the 2nd of this year. And she has to answer to FINRA by July the 7th. So we have two deadlines that will be at the very beginning of July. And we will see what will be the next step from Daniel Spears. So I think that's all information that I want to provide you. If you like my video, please hit the like button and subscribe to my channel with notification bell. And see you guys and girls next time. Bye!
I got the cash in the bag, stadium